What is up, you guys? Thanks so much for joining me today. It's your boy, the Finance Bro, and in this video, we will be taking a look at shares of Costco and see where they're trading on a value basis. All values that you will see within this video are as of market close on April 10th, 2026. And as always, this video is not investment or financial advice and is solely for entertainment purposes. So let's dive right in here. This is the past 12-month chart for Costco, and you can see that shareholders within that time frame have received a return of less than 1%. And the majority of that gain you can see is at the start of the year. At the beginning of the year, Costco was a lot of institutional money managers and a lot of analysts' top names just based on where it was trading near the $850 range, near its 10-year historical low in terms of its PE and price to sales. And there was also a lot of geopolitical risks from the tailwinds of tariffs and also the start of conflicts with Venezuela and Iran in the Middle East. And I'll talk little bit about that later on in the video about how Costco is a flight to safety. But you can also see there that there's that beautiful golden cross where the 50-day moving average in the green crosses over the 200-day moving average in the orange for a technical buy signal. So here's a few key points, and I just want to start with the 34 analysts that have a target price for Costco of $1,085.34, where shares traded on April 10th close of 2026. That implies an 8.7% return. Again, this is a steady Eddie company. You can see earnings per share growing through 26 and 27 of around 12%. Sales have grown over the past 12 months and have a solid 10-year average of growing sales of 8.4%. Now, you can see the profitability here in the gross margins of 12.9% and then the net margin of 3%. I'll touch on that a little bit later on in this video, but Costco's almost 76% of its revenue comes from memberships, and the remaining 1/4 of the business, give or take, operates on razor thin margins. When we look at where shares are trading in terms of price to sales, they're fairly valued, and the trailing 12-month and the forward PE ratio of 51.9 and 46 for the forward PE is indicating a little bit of a higher valuation range. And I just want to mention with the price targets, here you can see this is a 24-month chart of where shares trade in the solid line and the target price in the dotted line. Now you can see there are time frames where when Costco shares are trading upwards, a lot of analysts revise upward their target prices. Now we can see as well in January of 2026, there was 69% of the analysts had a buy rating on shares of Costco, where now you see that 10% lower at 59%, yet we don't see a revision upwards in the target price. That can seem to signal to investors that analysts may have a more conservative target in terms of where Costco shares are going, maybe that they're fairly valued and so forth. And you can see that from the discrepancy of January to April of 69% of analysts having a buy to 59% of analysts having a buy rating on Costco. Now we can possibly see further revisions upwards in the coming quarters. There is a little bit of a lag with those share prices and price targets. Here, I just want to point your attention to the valuation over the past 5 years. In terms of price to sales, Costco is trading fairly in line with its 5-year average, but you can see the PE ratios of the trailing 12 months in the first row and the second row, which has the forward PE. The forward PE I just want to take a look at here is 46. Its 5-year average is 41.4. So shares are trading a little bit higher than their 5-year average, which may mean that investors with new capital wanting to enter the name may want to wait for a pullback where valuations are a little bit more on the average side. So I'm going to present some bull cases and bear cases for Costco, and just I want to start with Costco's bread and butter is its membership. In Q1 of 2026, membership fees jumped 14% year over year, and that's largely due to the September 2025 fee hike and growing base of 81.4 million paid subscribers. Now, renewal rates remain rock solid in the US and Canada, around 92%. And like I mentioned, 76% of Costco's revenues come from membership, and they have one of the highest renewal rates across all sectors, all companies, when it comes to their membership program. What's very important is that Costco is capitalizing on the e-commerce boom. And this is coming after years of being seen as a digital laggard. Costco's finally seeing e-commerce sales growth. Over last year, it grew 22.6%, tripling the growth rate actually of their physical comparable sales. Now, this is a shift to more of a younger demographic and more app centric demographic that is more leaning towards Costco and the value that Costco provides its members and customers. And right now, Costco only holds just 1.5% of the US retail e commerce market. And Costco is the seventh largest online retailer in North America. In the mass merchant category, they're fourth behind Amazon, Walmart, and Target in that order. Now, Target has been losing share in its own execution issues and risks. And if Costco continues this great growth rate that it's having and it's projecting, it should overtake Target within the coming quarters. And 1.5% of the US e commerce space leaves a tremendous amount of market share for Costco to capture, which should lead to long term future gains for investors. And what's also a very big part of where Costco's long term growth is projected is if they're able to grow in the international markets. Now, they've maintained a very disciplined growth strategy. This year alone, they want to have 942 warehouses and locations. That's up from 900. So you're looking at around 3 to 4 store openings per month. And for such a large scale, that is pretty damn good. And the expansion of these business centers, they're called, and entry into new international markets does provide a multi year growth lever. And of those 900 stores, I just want to mention that they have, they're only located in 14 countries. So expansion of their locations internationally while bringing along their affordability and value model should allow them to capture more of these local market shares. Again, only 14 countries, the world is very large, and there's a lot of markets that they can penetrate and get into right now. And a good example of that I want to mention is when Costco expanded into Canada. For years there was many bears saying that there were some execution risks within entering the Canadian market, and you can see a lot of other retailers, Target for example, which did fail in Canada. But Costco, as of 2025, was actually rated the number one preferred grocery retail for Canadians. It goes to show if they're able to penetrate Asian markets, say China, Japan, South Korea, and so forth, and bring these value and affordability models to regions that really stress and emphasize that within their own cultures, you can see a big boost and boom to Costco's bottom line revenue. And I just want to mention there, and what I was showing in that 12-month price chart, where in January I mentioned that they had the Venezuela issues, and now we're currently in the Iranian conflict right now. You do see Costco as a safe haven asset. So when you do have macroeconomics deteriorating, whether that means inflation spiking worldwide, fiscal spending, debt increasing, or conflicts. Currently, right now, we're in the middle of peace talks with the Iranian regime, and that's why you can see in January you do see that big boost in the shares of Costco, a lot of flight to safety because of those conflicts. But recently, just on April 10th alone, Costco shares fell almost 3.5%. Again, there's a prospect of a peace deal, and if that is the case, you want to take money off your safe haven assets like Costco and go into your more riskier assets like other names we talked about in past videos, say Microsoft, Meta, and so forth. So this can actually be a good boost to Costco's bottom line. And right now we're also seeing high gas prices, and everyone knows that Costco prides itself on offering its customers cheaper gas. And if you're seeing a larger volume come into Costco stations because of high gasoline prices around the world, that is actually going to be a nice boost to the bottom line that they may not have projected in previous quarters. Now, I do want to take a look at some bear case scenarios. I think it's very important when we look at bull case scenarios, we do look at the bear case as well, so that we're not skewed on a bias either towards a bull or bear side of things. And the first bear case that I want to bring up here is what I've been saying in the video the whole time is where shares are trading currently is indicating a little bit of an overvaluation. Now, when you look at the price to sales ratio, that is trading in line with its 5 and 10 year averages. But when we look at the price to earnings ratios, that is trading on the upper end of both 5 and 10 year averages. So a re-rating in the shares may be needed, especially when investors look at sales growth of high single digits. Another bear case I want to mention here, and it is ludicrous when you hear this, is that Costco is actually facing some legal and regulatory risks to its subscription model. And what I'm referencing here is a significant class action lawsuit filed in March of 2026 in the state of California, which accuses Costco of violating automatic renewal laws. And when I'm discussing that right here, I'm talking about the renewal membership timeline. The California law actually mandates companies to notify customers about an upcoming charge in 15 to 45 days. Now, Costco goes above and beyond that at the 60-day mark, 2 months notice. It gives customers about an upcoming charge, whether it's a renewal of its card members' subscription or an uptick in annual charges. Now, you think that 2 month time frame is more than ample for Costco cardholders to budget accordingly for the upcoming charge or upcoming uptick of the charge. Now, the plaintiff is arguing that by sending the notice 2 months early, Costco makes it easier for consumers to get or overlook the upcoming charge, effectively depriving them of timely opportunity to cancel their membership. Again, this is quite ludicrous, but if this is successful, this could force a change in how Costco manages their most valuable revenue stream, which again is the subscription model. Also, that can lean into if there's an effective change in subscription basis. Costco already operates on razor thin margins. The grocery business and sector as a whole is not a high margin business, and they make 76% of the revenue through their subscription model. And if there is charges or changes, I should say, to their subscription model, you can see greater pressure on margins, which, if that is the case, longer term, investors need to re rate the long term growth and profitability of Costco. And this is a bear case I want to say in the last point here that every large company faces, and that's just due to the law of large numbers. And that is, how much bigger can you possibly get? Costco is quite large already. Again, in Canada and the US, it has a 92% renewal rate in its subscription model. Again, that is the Costco membership, renewal fees, and brand new customers to Costco. But again, if you're getting brand new customers to Costco and you're already having a 92% renewal rate, no company's perfect, but even to get to perfect, there's only 8% growth. So it is important in our bull case scenario that they execute accordingly on their e-commerce growth and their growth in international and developing markets. And with that, guys, I want to thank you so much for making it to the end of this video. Please do hit that like and subscribe button and stay tuned for the next video.